All right, let's get a reader on those themes set to drive markets this week. Pete McGuire joining us from XM. Pete, terrific to talk to you again. Hope you had a good weekend. You're all dressed up, expecting a big week ahead because it's starting with the Fed. Yeah, look, I mean, quite a lot to consider here, isn't there? Because where do you think we're likely to go with the Fed? They've got to obviously countenance the growing pains, the supply shortages, the bottlenecks. What are you seeing?
Good morning, Andrew. Yeah, and inflation, of course.
Yep.
We've seen a nice move over the last, matter of a day or so as far as that US dollar index has had a nice run up. So that's sitting at around about 93 and a quarter. So from a currency trade, the strength is in that US dollar. And of course, we've got a slew of banks meeting. So if we look at the Fed first off, as you mentioned, is November going to be the day? Are they going to push that out as far as that taper pullback? And of course, do we see a rate rise in mid-22? Now, I think that could be the thoughts. The uncertainty, Andrew, is the COVID numbers climbing in the US, and how do they manage that inflation story? So there's the issue facing the members.
Yeah. So, I mean, what are your thoughts just as far as that taper timeline is concerned? Do you think they're going to spell it out?
Well, I think they'll probably come to the conclusion that they'll push it back to November. I think we'll get some hawkish views then as far as, when do they actually, start to take those chips off the table. And what the general theme is, Andrew, is from a trading side, what do traders read into the message and what do they read into the cues? And I think that's the deliberation the Fed's facing at the moment. Inflation, how do you manage it? And the uncertainty, we saw those lower than expected job numbers, which really was softer than I think everyone was had on their radar. And that's where they need to be really concerned about as far as where we're going to be in November.
But it's shaping up as a really interesting week, isn't it? Because not just the Fed, but we're going to get a bit of a reader of globally how we're set at the moment, because we've got the Bank of Japan, the Bank of England. We've also got a couple of elections coming up at the same time. Yeah.
You've got Canada, you've got Trudeau, and then you've got naturally Mr. Suga's replacement for Japan. And then you've got the German election. So it's a very, very interesting end of the month. The next 10 days are going to be very dramatic. You've got the Swiss bank meeting this week. You've got Bank of Japan, Bank of England. You've got Indonesia. And I think it's going to be a boring one from Japan. Bank of England, they're trying to contain inflation. And where does that roll as far as their agendas with rates? I don't think there's going to be any surprises coming out of Bank of Switzerland. So it really is that US dollar may creep higher. We've seen our dollar get pushed back. We've seen the currencies really come under some pressure. So that could be the storyline this week. Look at your currency trades.
All right, okay. And if we take a look at Europe in particular, just interesting there, particularly as far as PMIs are concerned, that's going to be on the watch list, isn't it?
Absolutely, Andrew. They're always on the watch list. You're taking on board those numbers. The data dump this week is going to be very, very large. So for every trader, you need to be across it. You need to be across your dot plot, do some research on that. Look at the PMIs, and as they drop, what impact they're going to have to the particular currency that you're looking at. So they're the soft skills that you need to have as far as trading to really be conscious, not only from the technical side, but more importantly, I think, from the fundamentals and what they suggest to the market and the interpretation they have to the trade itself.
And across the channel in the UK, as you mentioned, the Bank of England there, also meeting. Are we likely to get an exit strategy for QE as far as they're concerned, do you think?
Well, they may, Andrew. I wouldn't be surprised they'll follow suit with a lot of the other naturally large reserve banks across the world. So I think that you will see, though I'm conscious that they're really in quite not a bad position, actually, the UK, and they've had a nice summer period. Those retail sales were a little bit softer, but we've had a big week of data, so I'm expecting, not suggesting any real surprises, but that momentum moving forward could be one of, some more sunshine leading into that autumn period for the English economy, and lead up to Christmas could be okay.
Now, Pete, of course, a lot of action commodity-wise, where we're seeing some of those prices, particularly iron ore, as that's playing out. How's that set to move, particularly the Aussie dollar at this point, do you think?
Well, I think, Andrew, they've all come under a fair bit of pressure, as we've seen, and that Aussie dollar's really back at around about 72 and a quarter. So I wouldn't be surprised to see that possibly even have a little bit further softness. You may take a 72 handle out. Let's just wait and see how the week rolls. And that naturally comes with US dollar. And then the other side, as far as the commodities, well, yeah, iron ore, copper, naturally they've had a very, very solid washouts. And the other thing, you've had very strong moves to the upside as far as energy. Natural gas up 80% since June. You've had crude up, you've got now WTI sitting at $71.5. You've got Brent sitting just on $75 a barrel. So they had very strong, that more than what any trader was anticipating. The push up over the last couple of months has been very strong for the energy sector.
Pete, have a good week. Thanks for joining us on XM.
Thank you, Andrew.